You look at the news and you see all this turbulence, all this chaos. Then you look at the headline economic numbers and they look good. So what is going on? We're going to dig into the data and try to understand this paradox. Let's get right into it.
So yeah, this is the big paradox at the heart of our investigation. On one hand, you have constant economic shocks and huge policy shakeups. But on the other, the economy just seems to be chugging right along. How can both of those things possibly be true at the same time?
To really frame this, let's use an analogy. You've probably heard people say the economy is this delicate, intricate machine, right? Kind of like a fine Swiss watch where every tiny little gear has to be perfectly aligned. Even a small change can have massive consequences. But lately, the adjustments have been anything but delicate. This quote just nails it, doesn't it? It perfectly captures the sheer force and, well, the chaotic nature of the economic policy we've been seeing. It really paints a picture.
So what does this jackhammer actually look like in practice? Well, just think about it. We've had sweeping tariff changes. They're on, they're off, they're on again, a record-long government shutdown, huge policy shifts on everything from taxes to immigration, plus we're piling on record amounts of debt. I mean, any one of these things would be a major event. All of them together, that's a whole different level of disruption.
And yet, and this is the crazy part, unemployment is still low, the market is near all-time highs, the economy appears strong. So what gives? It's time to peel back the layers of the data and see what's really hiding underneath that shiny surface.
Okay, our first clue is in the biggest number of them all, gross domestic product, GDP. It's the main scorecard for the economy, and right now, it looks fantastic.
An annualized growth rate of 4.3%, I mean, that's incredibly strong. Normally, we'd all be celebrating a number like that. But with that jackhammer still pounding away in the background, you have to ask, is this growth even real?
So yeah, that's the multi-trillion-dollar question, isn't it? Where is all this growth actually coming from? Is it as robust as it seems on the surface?
Well, the data tells a fascinating story. You've got two huge forces at play. On one side, there's this absolute tidal wave of investment in AI, which is boosting GDP. But on the other side, that positive pressure is being almost perfectly canceled out by businesses selling off all the inventory they'd stockpiled. So net investment is basically flat. The AI boom is pretty much just painting over the cracks.
Let's move to our next piece of evidence, the country's trade balance. Now, the numbers here also look surprisingly good. They show we're exporting more and importing less. But you can probably guess where this is going. The story isn't quite what it seems. And this analogy just puts it perfectly. Sure, the cash flow might look good for a minute, but you're liquidating assets that you can't get back. It's just not a sustainable way to become prosperous. And here's the breakdown. Of the $26 billion in export growth, a staggering $18 billion, that's almost 70%, comes from selling off gold and silver. This isn't growth from building new things. It's from selling our precious metals. And that's partly because other countries are trying to diversify away from the US dollar. Not exactly a huge vote of confidence.
All right, now for the biggest engine of the entire US economy, the consumer. Spending is still the largest contributor to GDP growth, which should be a great sign. But again, we need to look closer.
And here's the crucial point. This growth isn't really broad-based. First off, a record amount of the spending is being done by the wealthiest households. And second, most of the growth is concentrated in things people have to buy, not things they actually want to buy. The numbers here are just wild. A whopping 65% of the growth in consumer spending comes from healthcare and pharmaceuticals. That's driven by rising prices, an aging population, and really expensive new drugs. So people aren't spending more because they feel confident about the economy, they're spending more because they have no other choice. Okay, so now we come to the final piece of the puzzle. This is the one variable that affects everything else we've looked at. It's the big twist that puts all these other numbers into a new and much more concerning context. Over the past year, the US dollar has fallen over 10% against other major currencies. Now that is a huge move, and it quietly makes many of our domestic economic figures look a lot better than they actually are. So let's just walk through how this works. When the dollar's value falls, US assets, like stocks, go up in dollar terms. That makes wealthy households feel richer, so they spend more. At the same time,
our exports suddenly become way cheaper for foreign buyers, which boosts that number. And imports become more expensive for us, so we buy less of them. The result of all this? A distorted picture that makes headline growth and trade look artificially strong.
So, after peeling back all these layers, what's the verdict? Why hasn't the economy actually collapsed under the weight of this jackhammer?
Well, the reality is that the US economy isn't invincible, but it's kind of like a massive cargo ship in a storm compared to smaller sailing boats. Its sheer size and its central role in global finance create this enormous buffer, which allows it to absorb shocks that would absolutely shatter smaller economies.
And this is probably the most important takeaway from all of this, that buffer doesn't make the problems go away. It just pushes the consequences further down the road. The foundations are being weakened, even if the building is still standing for now.
Which leaves us with this final, really provocative thought. The structural issues that we've uncovered here today, they're going to have long-term effects. The real question is, who is going to be there to deal with them when the bill for all of this finally comes due?